Xpeng Motors IPO. What you're looking at right now is the disclosure Xpeng Inc. Filed with the SEC. This is a Form-F1 registration statement. The folks at SeekingAlpha have just basically summarized it, and they have it that Xpeng Motors aims to bring in more than $1 billion with IPO. Chinese automaker Xpeng, the stock ticker is XPEV, expects to offer 85 million ADSs at a price of $11 to $13 per ADS in its IPO. The company will raise more than 1.1 billion at the top of the range. The company says it's primarily targeting the mid to high end segment in China's passenger EV market, with prices ranging from 150,000 renminbi, which is 21,000 and some fraction, $21,000 and some fraction, to 300,000 renminbi, or $43,000 for its smart EVs. Xpeng says it's utilizing an omni-channel sales model which combines a data-driven and targeted online marketing strategy with a physical sales and service network. As of June 30, the physical sales and service network consisted of a total of 146 stores and service centers, which cover 52 major cities in China. Okay, so this snapshot is what we have here already, and we'll definitely include the link for you to open and read. 85 million American depository shares, representing 170 million Class A ordinary shares. Okay, the underwriters expect to deliver the ADSs against payment in New York. They didn't provide a date. The underwriters are Credit Suisse, JP Morgan, Bank of America Securities, and these are the ones below. So this is this is the G3 SUV, and that's the interior, and this is the P7 4-door sports sedan, and that's the interior as well. And this is the X-Pilot 360-degree perception, and the 3-in-1 electric drive system and battery pack. This is the interior of one of their plants, the Xpeng plant. So you have a couple of items here. Okay, let's quickly go down to the consolidated financial data, and probably we will quickly have a look at the risk factors. Okay, revenue, vehicle sales as at 6 months up to June 30th, 900 and this is in 913 million. Okay, 129. This is in renminbi. This is in US dollars. 129 million 265. Service and orders were 112 million and some fraction. Vehicle sales, cost of revenue. Okay, operating expenses, research and development expenses. Okay, loss before income and expenses. Okay, there's no figure there. Net loss is 112 million or 130 million approximately. And consolidated balance sheet, cash and cash equivalents, 200, this is $2 billion as of June 30th, 2020. Okay, then down here is the consolidated statements of cash flow data, and the net cash used in operating activities. It's in negative 171 million or 172 million. Net cash used in net cash used in provided by investment activities, also in the negative 23 million and 389,000. Net cash provided by investment activities, 122 million or 123 million dollars. And then the cash equivalents and restricted cash at the beginning of the year period. Cash is 340 million or 341 million. Cash equivalents and restricted cash at the end of the year period is 263,000. So this, it represents the assets that are easily convertible to cash. So that's what we have. That's $268 million. That is liquidate. That is easily convertible to cash. So the risk factors are here. We have a limited operating history and face significant challenges as a new entrant into the industry. As we continue to grow, we may not be able to effectively manage our growth. Our research and development efforts may not yield the expected results. If our smart EVs, including software systems, fail to offer a good mobility experience and meet customer expectations, our business results of operations reputation will be materially and adversely affected. We only recently started to generate revenue and have incurred losses in management and negative cash flows from operating activities, all of which may continue in the future. We have only recently started to generate revenue. I have not been profitable since our inception. The design, manufacture, sale and servicing of smart EVs is a capital intensive business. We have been incurring losses from operations and negative cash flows from operating activities since inception. We incurred net losses of $522 million and $112 million for 2018, 2019 and the 6 months ended June 30, 2020 respectively. Net cash used in operating activities was get a value in dollars, $504 million and $171 million for 2018, 2019 and 6 months ended June 30, 2020 respectively. We have made significant upfront investments in research and development, our manufacturing facility in Xpeng, our sales and services network, as well as marketing and advertising to rapidly develop and expand our business. We expect to continue to invest significantly in these areas to further expand our business, and there can be no assurance that we will successfully execute our business strategy. We may not generate sufficient revenues for a number of reasons, including lack of demand for our smart EVs and services, including competition, challenging macroeconomic environment due to the COVID-19 outbreak, as well as other risks discussed herein. ability to become profitable in the future will not only depend on our efforts to sell our smart EVs and services, but also to control our costs. If we are unable to adequately control the costs associated with operations, we may continue to experience losses and negative cash flows from operating activities in the future. We expect our existing cash and equivalent to be sufficient to meet our anticipated working capital requirements, including capital expenditure in the ordinary course of business for an extended period of time. However, we may need additional capital resources in the future if we experience changes in business condition or other unanticipated developments, or if we wish to pursue opportunities for investments, acquisitions, and capital. Okay. Yeah, if Tesla and NIO and all the other electric car vehicles, all the other electric car stocks are anything to go by, if you think they are going to draw some strength from what is going on with Tesla and what is now the green or electric vehicle craze, so if you think that is going to bode well for Xpeng, so have a look at this and see what is there for you. Have a critical look at the things and use of proceeds. We estimate that we'll receive net proceeds from the offering approximately $972 million and approximately use $1.1 billion if the underwriters exercise their over allotment option in full after deducting underwriting discounts and commissions and estimated offering expenses payable by us and based upon an assumed initial public offering price of $12 per ADS. The midpoint range estimated the initial public offering price range shown on the front of the cover prospectus. A $1 increase or decrease is in the assumed initial public offering of $12 per ADS would increase or decrease the net proceeds to us from this offering by $81 million after deducting the estimated underwriting discounts and commissions and estimated aggregate offering expenses payable by us, and assuming no damage, the number of ADSs offered by us are set forth on the cover page of this product. Okay, so 50% of the proceeds approximately for research and development of our smart EVs and technologies, 30% of the proceeds for selling and marketing and expansion of sales channels, and 20% of proceeds for general corporate purposes, including working capital needs. Okay, these are so dividend policy. Since inception, we have not declared or paid any dividends on our shares. We do not have any present plan to declare or pay dividends. Okay, so you see, they currently don't have any plans to pay any dividends. Capitalization. The following table sets forth our cash and cash equivalent short-term borrowings, current portion of long-term borrowings, and capitalization as of June 30, 2020. Okay, cash and cash equivalents. This is in thousands. It is 14 billion. Okay, that is $2 billion. That's in renminbi. Short-term borrowings is 39 million. Long-term borrowings is $239 million, and accumulated deficit is $1.3 billion. Total shareholders value deficit is 2, but it's not. If it's deficit is in, I guess it's in brackets. So this is 2.3 billion capitalization, 2.5 billion dilution. If you invest in our ADS, your interest will be diluted to the extent of the difference between the initial public offering price per ADS and our net tangible book value ADS after this offering. Dilution results from the fact that the initial public offering per Class A ordinary share is substantially in excess of the book value per ordinary share attributable to the existing shareholders for our presently issued ordinary shares and holders of our preferred shares, which will automatically convert into ordinary shares upon the completion of this offering. So if you feel strong about this, have a critical look at this document. You're going to see it right below in the description box, and see whether you can contact some of the underwriters to see if you can purchase them. And if we find a link where you can easily do that online, we'll also include that for you. Okay, thank you very much for watching this video. Don't fail to subscribe to our channel, and hit that notification bell as well. Thank you.